Hey everyone, how's it going? And welcome to the Newbie Real Estate Investor of New Jersey show. I'm Jonathan Boyle.
And I'm Joey Chan.
Roy Temiz.
And let's get directly into it.
All right.
Yeah, today we have a special guest, Roy Temiz. Roy's a investor here in New Jersey. How long have you been investing in real estate?
Yeah, so first of all, guys, thank you for having me. It's an honor to be a guest here. And I wish you guys a lot of luck and success with the show. I'm very excited about what it's going to come to. So excited to listen to future episodes. So good luck, guys. I got started about 4 years ago on my first fix and flip project. I actually purchased a property right in town here on my first project. It was just a cosmetic rehab, just like down and dirty. We just basically refinished the floors. There was hardwood floors in there already. We redid the kitchen. We redid the bathroom, or part of like half of the bathroom. Tried to keep costs at a minimum. We were done with the renovation in about a month and a half, and that kind of got the ball rolling for us.
Nice.
Nice. So that was in Hillside.
Yeah.
Said, right?
Yeah.
Okay. Just so everyone knows, I'm pretty sure you can get the idea of the show by now. That you're seeing us in a lot of different areas. This is one of Roy's projects right now here in Hillside.
Yes,
almost complete. Like what?
Yeah, we got tiles and floors going in next week. We're pretty much almost done with the drywall here. We just got to do some sanding, and then onto like the trim work, the cabinetry, and then to the finishes. So we probably got like about a month here, maybe six weeks.
Okay. Nice.
Nice.
So, Roy, just for the audience around here, how, like, when you got started, like, how did you get started exactly? Was it like with hard money, your own money, or like what did you do?
So I borrowed money. So basically, just to give you a little bit of feedback on my past, I was always, my whole life I was surrounded by entrepreneurs. Business owners. I got kind of like molded into that, and my father immigrated here in the early '80s, started a business, an electronics retail business from the early '80s, and grew it from one store to 19 stores at our peak.
Oh wow!
Yeah, so once that business went under, I was doing that for the longest time. Once that business went under, I kind of like struggled finding like what to do, and I tried a bunch of things before I landed into real estate, into that first fix and flip. And initially I was going to, just to get back to your question of how I got started with that, initially I was going to take a HELOC on my personal property, and I kind of at that time kind of did a house hack on my own house without even knowing it.
Okay.
I did a renovation on my own house.
Right.
And added value to it that way. I was going to do a HELOC on that, and then when I found the first property, the timing was just not going to be right. So I went to family and borrowed the money for that first rehab.
Nice. Okay.
And that's kind of how I got started with that.
Nice. For the audience out there, do you mind explaining what a HELOC is?
Yeah, so a HELOC is basically a home equity line of credit. So if you have enough equity in your residence or in another property that you may own, the bank will, basically give you a line of credit to release, to almost capture some of those funds, where whatever you're using, basically you're paying an interest rate on.
Okay, awesome. And most banks, they do it, what, like 70-80% or?
Yeah, they do up to 70% for the most part, depending on your situation and how much equity that you have in the house or your income and all that stuff.
Of course. So just so everyone here in the audience is aware, let's say your home is worth $100,000, you owe $50,000. Now these are all rough numbers, and of course there's fees associated, but just in this scenario, then you could pull out up to 70%, which would be $70,000. So you could pull out $20,000. So something like that.
Yep, exactly.
Okay.
Yep.
Awesome.
Nice. So Basically, after the business, the initial business failed. You were struggling to kind of find what to do. So you got into real estate, right? Did you?
Not immediately, but yeah.
Okay,
Yeah.
so it took some time.
Yep.
You were doing a lot of soul searching.
All that stuff. Trying different businesses
Yeah.
that worked and failed. Some didn't work at all, just completely failed. But
Okay.
What were some of them? I'm just curious. if you don't mind.
Well, right afterwards, I did some online sales, like on Amazon, selling like products.
Okay.
And that was kind of my past, so I kind of lost the passion for that very quickly after that. But then I started doing online iPhone apps. So I found developers in China and India that would kind of build the apps that I would tell them to build.
Mhm.
And at the peak, I had over like 100 apps in the iPhone store,
Wow.
and it was generating a pretty decent income. It was pretty cool. It was kind of like a thing where you got to like work from anywhere as long as you have an internet connection, and it was cool getting to see like how the downloads grew and all that stuff. But then Apple changed their kind of algorithms around. I was up to a point where I was getting like 20,000 downloads a day. It dropped to half, and then it kept dropping, and then I had to do some soul searching again to see what my next step was.
Oh wow.
Yeah.
Nice. So, getting back to real estate,
Yeah.
did you jump right? So once you did that first property,
Yeah.
did you just jump right into real estate, or you kind of just took it slowly? You know.
So the way I am is I always jump into everything like head first,
Mhm.
and then try to figure out things later.
Yeah.
That's just the way I've always been about
Yeah.
everything. When I jumped into real estate, I didn't know that it was going to take me on this path, like on this longer term path.
Sure.
I was unsure. It was something new to me,
Yeah.
but I went all in on it.
Okay.
I went all in on it. It was a full-time gig for me. It was a full-time job for me. Even at that point where it was only one
Mhm.
property, like I was still researching the MLS like crazy. I was doing drive-bys. I was going to see properties. I was educating myself as much as I could.
Right.
Even though there was really not much that I can do with one property, I was going to visit the site a
Yeah.
lot, but you go there for an hour, see if the guys are there working, and then
Yeah.
your day's pretty much like, okay, what am I gonna do now?
Right.
But I would utilize that time to educate myself
Okay.
and educate myself in different markets.
Nice.
Yeah.
What kind of education did you get yourself into? Kind of.
So no type of like formal education
Okay.
in the beginning.
Mm-hmm.
Just basically like market research, doing my own research online and that kind of stuff. I wish I had done some more formal type of like stuff and like networking events that I do now,
Yeah.
and like more like educational type of stuff that I kind of like engulf myself in now.
Mm-hmm.
Had I done that, I always think maybe I would have been a little bit further along.
Okay.
But I was doing basic research on my own, just seeing sites, seeing different types of houses, speaking to other people that are in the business, that are flipping houses, trying to learn and educate myself from people that had experiences doing this kind of stuff.
Yeah, no, I think that's a great way to go
Yeah.
about it, especially at the beginning, if you don't really know a lot about those networking events and things like that. That's how I sort of started all the way at the very beginning,
Yeah,
so yeah, that's a good way to do it.
yeah,
Yeah.
Just learn from people that are actually doing it, because when you go to these events, that's basically what they tell you to do
Right.
anyway.
right,
They say, oh, go find a mentor or go find someone that has experience
right,
and learn from them.
right.
So you kind of skipped the networking and went right into it.
Yeah, I went right into it, and I'm the type of person that learns the most by experiences. I have to experience it. I have to make the mistakes on my own. I hope that I don't make the same mistake twice,
Yeah.
and then move on and try to perfect the system that I've created.
Nice.
Of course. Yeah, no, like I definitely understand where you're coming from, because when I got started too, I was going to a lot of the networking events.
Yeah.
I went to Bigger Pockets a lot to like dive into the research,
Yeah.
listen to like hundreds of hours of podcasts.
Yeah.
So, Yeah, no, it's I'm the same way. I have no formal education when it comes to.
Yeah, so for me, even like I didn't even know about any of that stuff until after my maybe like my third or fourth flip, and then I was like, oh wow, there's like a whole community of people that are like, talking about this stuff, and there's like podcasts and stuff that I can learn from, and then I really started like like consuming myself with all that kind of stuff.
Yeah, I see. Yeah, because I didn't see you until. Like on, let's say,
I think it was
I first saw you on Facebook, and I'm like, who's this guy? And I see this guy doing all these projects. I'm like, wow, and I didn't even heard of this guy.
Yeah.
Because I've heard of a lot of the guys that are doing projects out there, but there's always a lot of people that you don't even know.
Of course, not everybody is on social media and that kind of stuff.
Yeah, I mean, I'm sure there are like tons of builders that are doing their thing, and nobody knows who they are.
Yeah.
And
that's another thing that, by the way, helped me propel my business. Like you said, I was doing this for 4 years.
Right.
This is now going to be 4 years, and I just started doing that social media, Facebook, Instagram stuff like a year ago.
Right.
And I made a conscious decision to do that kind of stuff, put myself out there, and kind of see where it leads and what it would get me. Initially, I just wanted to showcase what I do.
Mm-hmm.
Maybe if it would help me get a deal, if it would help me get funding, if it helped me sell a house.
Yeah.
Then if it works, it works. And actually, it helped me do all those things. And it's such a powerful tool that I wasn't using before, that I'm using now. And I gotta say, it's helped me in a lot of ways. And it's something that kind of goes against my grain to do. Like I'm not like a generally public type of person.
Yeah.
But putting that stuff out there is powerful, and it's stuff that it definitely works.
Yeah, I was the same way. I'm very, very kind of to myself.
Yeah.
I don't really, I'm very shy. I don't really interact with, all these people, and now it kind of like evolved.
Yeah.
Now I'm on Facebook a lot, on Instagram.
Yeah.
And
I've met a great community of people from doing that kind of stuff. People that I would have never met before. Like I met you guys from there.
Right.
Bunch of other people that are in the space, and great people that I can call like friends now.
Yeah.
So it's cool.
Same.
Yeah.
That's awesome.
Exactly. So Roy, I have a quick question. As far as when scaling your business, because now how many projects do you have going on?
Currently have 16 properties that are all in different stages. Yeah.
Okay.
Some of those are holds.
Okay.
That we are either have tenants in or about to get tenants in there, and a portion of those are fix and flips. Most of them are fix and flips.
Okay. So when did you start scaling your business to that stage, and how did you start scaling it?
Yeah. So after maybe about like after the first one, I had kind of like an aha moment there. Okay, there's something here. There's something behind this. I turned a profit. I got through the first one, and even really without getting completely through the first one, I was able to know that there was going to be a profit made because I got an offer accepted and all that. So went on to the second one. Then I started putting some offers in. After about the second or third one, because your money runs out quickly, of course.
Yes.
Then I started expanding my search for raising funds. Then I started telling people what I did. Before I wasn't telling anybody that I was flipping houses on that first one, second one, third one.
Mm-hmm.
Then I started, going to family members, going to friends, telling them what I did. Hey, this is what I'm doing now. I'm flipping houses, this and that. Would you like to get involved? This is what I did before. I purchased this house for this much. I put this much money into it, and I got this much money out of it. Then once you start able to raise funding, it's like a game changer. Obviously you can't do this without money.
Yeah.
And whether it's your money or hard money or private money, you need those funds to grow this business.
Of course.
So I started doing that. And Grant Cardone talks a lot about like going after your power base. I went after my power base. Power base could be like family members, friends of friends, people that you went to high school with or whatever it is, Tell them about what you do, because if you don't sell to them, somebody else is. And we're not only selling houses in this business, you know, we're also selling investments. That's where the real estate investment part comes from. You know, so you have to sell yourself as someone that can not only flip a house and sell a house, you have to sell yourself as somebody that can take, you know, somebody's money, keep it safe, and then provide them a good return on the backside.
That's great value right
You know?
Yeah.
there. Yeah.
That's definitely something I need to reach back out to my power base.
Yeah.
Because
Because everybody has one, and if you're not going after them, somebody else might. Like if you're not taking their money and putting it in a good investment, they might be putting it in the stock market. They might be putting it in Bitcoin. They might be putting it somewhere else that maybe will or might not get them as a good investment as you could.
Yeah.
You know,
No,
and you have to have those conversations. You have to be open about that kind of
Yeah,
stuff.
no, you definitely make a great point because something that for everyone to know, for my, I think it was like my fourth or fifth investment property, I got it under contract and I didn't know how I was going to fund it, but I just randomly one day spoke to one of my drinking buddies. He's one of my best friends now, you know, like, and I didn't realize how good of a job he had. I didn't realize that he had like, I think it was like $80K just sitting in a bank somewhere.
Yeah.
So I'm just
And
like,
you don't know that until you have those conversations.
exactly.
You know.
So then we worked that out, and you know, like he's one of my investors now for 2 of my projects at the moment.
Nice.
So
Nice.
you never know what you don't know.
That's
what
also
you don't know.
you bring something up that's very important, and that's also something that's helped me scale this business. Once I changed the mindset to get the deals first and then find the money, it was a game changer for me. Before I was waiting for the money to come in and then search for the deals. There's been times where I had like 4 deals under contract. I knew there were deals. You know, I knew there were money makers. Just how do you get that? You know, it's like having a bag of cash stashed in front of you. How do you grab it, right?
Yes.
And you have to go out to different investors and pitch them. And I've had those situations where I've had like multiple deals under contract, and then I've went and looked for the money, and I was able to find it because people want to invest in something that's solid. You know,
Exactly.
people are tired of the stock market going up and down and like all these other investments that are not secure. They're looking for people like us.
Yeah, exactly.
You know.
You're pretty well known for your strategy, which is like at a level. I know that's not all you do,
Yeah.
of course,
Yeah.
right? But explain to the audience a little bit about what an at a level is,
Okay.
you know, and what kind of value that provides,
Okay.
you know.
Yeah, so ad levels are basically dated capes and ranches that basically have one level. You know, they're just like a box basically,
Right.
with a basement. And what we do is basically gut the entire house inside and out, all the electrical, the plumbing, all the drywall, everything comes out. We basically chop the top and add a second floor, essentially doubling the square footage of the property.
Right.
Yeah.
So that's
And that's essentially, I mean, if you do that, you go from something that's like 800 square foot to like 1,800 square foot, 2,000 square foot. Essentially, you're doubling the value of the house, so to speak.
right.
You know,
Yeah.
of course, it costs money.
Yeah, of course.
Yeah.
Yeah, I mean, it doesn't work in every market, so we don't try to force it in every market. But typically, I like to run, anywhere from 2 to 3 ad levels at a time in a given year, mixed in with my other projects. If I can find more, I would do more. But generally, with ad levels, there's a higher profit dollar amount and a higher profit margin amount. These projects take a little bit longer, of course. And build time is somewhere between 5 to 6 months. And regular fix and flip, you're pretty much you sold the property from close to close for like 5 to 6 months.
Yeah.
But just the build time is gonna run you 5 to 6 months. But the profit dollars are higher, the profit margins are higher. So typically, if the opportunity is there, we like to go for it.
Right.
There's been instances also that the house was in good shape. It was a cape. It could have been an ad level, but we just did a quick and dirty, rehab inside the house. The house is in good condition. We didn't want to knock it down and completely gut it. and it worked out that way. So you have to really like take each house as its own animal, you know.
Of course.
And sometimes it makes sense, and sometimes it doesn't. You got to run the numbers.
Yeah, of
You know what
course.
I mean? If the numbers make sense for an adult level, we go for an adult level. If the numbers make sense for a cosmetic rehab, we'll do a cosmetic rehab.
Yeah. Like basically, it depends on your time as well.
Of course,
So, like,
time
if-
is a big factor.
So like if you're gonna make 50K profit off of a 4-month investment rather than let's say 100K off of a year investment,
Yeah.
you know, you have to.
You have to
like,
weigh that.
weigh that.
So I might, in that instance, I might go for 100K off a year.
Yeah.
But if you're talking 50K in 4 months or 70K in like a year,
Then
I might go to 40K and just take that profit and roll it into the next deal.
of course makes a lot of sense.
Yeah. So you have to weigh those options. You have to see where you are in the game also. You know, you have to see what your goals are.
Yeah.
You know, it's different for everybody also, I feel like.
Do you ever take into account what season it is? Like, let's
No,
say, for
never.
example, it doesn't matter. Like,
No.
it doesn't matter if you're buying, let's say, in the summer and then you end up like selling in the winter.
No, I never think about that.
Okay.
I never think about that. I always, when the house is ready, I
Mhm.
put it up. I don't think about the seasons that I'm buying
Okay.
because we have so many projects that are in different stages.
Yeah.
And it's kind of nice to have different projects in different stages. I don't want them to all be in the same stage because that's cumbersome. That's
Yeah.
actually harder to manage that way.
Mhm.
So we don't really think about seasons.
Okay.
You know, if the house is done and ready, if it needs sheetrock, it needs sheetrock. We just go to the next step. If it needs tiles, we keep on going and then,
Yeah.
and then go to the finish line.
Right. You just try to push it to the end no matter what.
Yep.
Mhm.
Yep.
Okay.
Yeah.
That's-
So as far as all those projects, do you manage them yourself, or how does the management aspect of that work?
So for the most part, I'm GCing most of the projects myself. If I get like really busy and overwhelmed, I have a couple of GCs that I can go to also.
Mhm.
There are GCs that are handling a couple of my projects right now that I'm basically not touching at all. And that's really like, you'll go too crazy if you try to manage all of that yourself.
Of
It's
course.
just,
Yeah.
it's just, it's
I
too
see.
cumbersome. And if you have, I mean, it also took me a good couple of years to find the right people to be able to trust and say, here's an entire project, you know, run with it.
Mhm.
You know, I think that's one of the most challenging parts
Yeah.
of this business is to find those good people that you can rely on.
Right.
So when did you transition? Like, did you start GCing from the first project,
No.
or when did you transition?
No, I had-
And how was that transition?
I had no idea how to GC anything from the start. The whole construction, the fixed piece of this whole thing was like a big question mark to me. So the first one was a trusted contractor that did my house.
Okay.
He was the same guy.
Okay.
So I trusted him. I didn't even bid anything out. I knew who I was going to. I was like, okay, how much is it going to cost? Okay, good. How long is it going to take? All right, fine. Run with it. And then I started finding other guys for other projects. The guys that were reliable, I held on to. The guys that weren't,
Right.
you know, you just never work
Yeah.
with them again.
Mhm.
Or keep them in your back pocket if you ever need some type of emergency type
Yeah.
of thing.
No, I know. I've used some of your contacts
Yeah.
as well. You
Yeah.
know, so yeah, I know we definitely have some good guys that you work with.
Yeah, yeah,
Yeah.
yeah. And it takes time to find those guys.
Yeah.
You know?
Mm-hmm.
Because there's good guys out there, and there's guys that will take you for your money. So
Yeah.
it's just part of the business.
Exactly.
Yeah. So talking about that last item,
Yeah.
what was some of the biggest struggles you had in the investing space itself?
I think my biggest struggle was definitely the construction part of it.
Okay.
Because that's a part of this business that really I didn't have any experience in. Like finding the deals almost came naturally to me.
Mm-hmm.
I don't know. I was just like doing the research on that and going to the houses and finding the deals just came naturally. Selling it, doing the construction part, like doing like the finishes and all that was easier. Finding like the right guys was a challenge because in the beginning, besides that first one that went really well because I knew that guy, the other ones kind of went slowly, really slowly. you know, and it took a good amount of time to get the right type of crew together where projects were now moving quickly. I mean, we were into some projects that we should have finished in like 3 months. We were into them almost like a year in the beginning.
Wow.
Yeah. So that part was definitely a challenge.
Alright, make me feel better.
Yeah, man. I think all beginners. I don't think anyone should feel bad about that. You know, I think especially if you're not coming from like a contractor background, like Joey, I knew you come from a contractor background.
Right.
If you don't though, like that part can be very cumbersome and very difficult.
Yeah, I mean, even as a contractor with that background, you still have that struggle.
Yeah. I'm not surprised.
You know, I just sold you know, the house in Maplewood, and it took us about 10 months.
Yeah.
You know, to do that project. So it's
so it happens to everyone.
Yeah.
You know.
Yeah.
Yeah.
So, yeah.
And honestly, like, doesn't matter how much experience you have in this business, and all, something somewhere is going to happen at some point where the job is going to get stopped, or a contractor is going to, you know, do something like that they shouldn't be doing, or something is going to happen.
Yeah.
You know?
Yeah.
It's unfortunately just the nature of this business, and you try to avoid those things as much as possible, but
Exactly.
you know, you have to expect that they're going to come at some point.
Yeah. So so on the opposite spectrum, what was the best deal? Maybe not a specific deal, but what was the best experience you've had? You know, in terms of real estate.
Best experience in terms of a deal, or
let's call it a deal now.
okay. I mean, till this day, one of the best deals that I can think of, honestly, is a deal that I almost did like really nothing in. I bought a 2-family house. It was in Fairview. I had put in an offer, $30,000 below asking. They came back. We agreed on it. And at that time, we had closed on it. And at that time, I was just too overwhelmed with other projects. So I think I had bought it for like $235.
Okay.
And the house, you know, needed work, but I think for the value of a 2-family house in that area, I think it was completely undervalued. It was a bank-owned property, and I think the bank just completely missed the ball on the pricing. So because I had other projects, I was like, let's just, you know, put it up on the MLS for $349. That's what I figured that it was a normal price for that house. And I'm telling you, within like a week it sold. We didn't do anything to it. Nice. We didn't touch it. So after paying commissions and all that, it was a pretty hefty amount. You know, it was like $70,000 or something like that in profits. And that was like deal number like 4 or something like that. Wow. And I was like, wow, this is awesome. Let's keep doing this. You know? But I mean, those deals are hard to come by.
Yeah, they are. They're
but
very rare.
you always go back and like reminisce about those, because those are like, you know, the butter ones.
Yeah.
But honestly, since then I haven't really found like a deal like that. But that one always like sticks with me.
Yeah. Right now, Joey and I are looking at one similar to that.
Yeah.
You know, by the time this podcast airs,
It's gone.
it should be gone, or we have it. But it's
those are sweet ones, man.
It's funny.
Yeah.
Yeah, I mean, we did one very similar to that, you know, a few months ago.
Oh yeah.
You know, they just finished construction on it.
Yeah, they just fully renovated it.
Yeah. Oh, they had just fully renovated?
Yeah. So I think, what were the numbers? I forgot.
So we bought it at 205. We closed on it.
Nice.
We sold it at about
290.
290. Yeah.
Nice. Without doing anything to it?
Nothing.
Yeah, those are the best ones.
Yeah, I bought it, put on the MLS.
I mean, they're few and far between, but
yes, they are.
you know, when they come, they're quite nice.
Yes.
Yeah.
It's a beautiful time.
Yeah.
When you have that.
Yeah. It helps. It's not bad.
I love it.
Yeah.
So, okay.
So, Roy, do you have any books or podcasts that you listen to now that you would suggest to people?
Yeah, podcasts. I mean, I still listen to Bigger Pockets almost like on a weekly basis. I wouldn't say daily, but you know, we do a lot of driving in our cars, right? I'm sure that you guys do too. Sometimes I do 200 miles a day, and I just listen to books and podcasts all the time to educate myself. So podcasts, I listen to a lot of Bigger Pockets. Rod Cleef is another one that I've been listening to. He does a lot of like syndication type, like apartment building syndication stuff, and that's kind of like somewhere I want to transition into at some point. So I've just been educating myself about that kind of stuff. And books, man, I listen to Grant Cardone a lot. The Sell or Be Sold, the 10X Rule. I mean, that thing just like fires you up. Sometimes I tell myself I gotta listen to that thing like once a month. Because he's a little bit like in your face a lot, but like some of the stuff that he says is like really gold. So it just like lights a fire in you.
Yeah, exactly. Like my favorite thing with the 10X rule is like you always want to shoot for 10 times what your original amount of what you want to do is. Like, oh, I want to flip, let's say 12 houses, I'm gonna flip 120 now.
Yeah, why
because
not?
then, you know, like chances you might not flip 120, but if you do, that's great.
But if you get to 50, it's still better than your 12 though.
Yeah,
right?
exactly.
Yeah, so there's a lot of really good nuggets in that book. Sell or Be Sold also, like the power base and all that stuff, selling to your, there's a lot of good nuggets in those books. So.
Oh yeah, absolutely. We love it. So tell us what you're doing now, besides the real estate, as far as education or anything like that. The bus tour you have.
Yeah, so the bus tour is Gabe's bus tour, and I was fortunate enough to do a co-host event with him.
Yeah.
If you guys ever have the opportunity, you were there on the last one when I was doing the co-host. But if you guys ever have the opportunity, Gabe runs an amazing event there, and he really shows the whole process of how to find deals, fund deals, fix them, flip them, everything. And he really gives out like a ton of valuable information on those things.
Yeah.
So if you guys ever have an opportunity to go to that, amazing event.
Awesome. I know Jonathan just...
You went to the last one,
Yeah,
right?
I just went to the last one.
How was it?
It was really good. A lot of value there that I got out of it.
Yeah.
The biggest thing was about how to cut costs when it comes to materials.
Yeah.
That's one of the biggest killers out there.
Yeah.
Just constantly shopping at like Home Depot doesn't cut it if you're trying to scale.
Yeah.
So.
Yeah. So Gabe was actually one of the first guys that I did an analog with. Like I learned that process from Gabe.
From him, right?
Yeah. And I was fortunate enough to do a deal with him to learn that whole process throughout like the beginning of the deal and through the end. And really the beginning of the fixed process and through the end. And I think that's kind of when I also grasped the fixed part, the construction part a lot better. That's right after doing like an ad level like that.
Yeah.
And especially after doing ones on my own. Like I said, I always learn by experience. Like learning his process and then taking it and doing it on my own, that's when it really started kicking in.
Nice.
And then that's when I started getting like the fixed part really in tune.
What number deal would you say that was approximately?
I think it was like 5 or 6.
Oh, okay.
Yeah.
Okay, so there's
My intention actually was going to be just to do like a rehab on that deal, but it needed everything. It was like one of those capes that you need to do a new roof, new siding, new electrical, new plumbing. I was going to basically gut the whole house anyways.
Yeah.
And I was probably like, at my cost, going to probably spend as much as we did together at Gabe's cost to do it at a level.
Wow.
So, because I was still like fresh in it and he kind of knew that whole process, so, and everybody's costs are different, as you know,
Of course.
So I was still a beginner. I was still a little bit wet behind the ears, especially on that fixed part. And I think we spent like $150,000 on that rehab. I probably would have spent that keeping the same structure.
Yeah,
You know what I mean?
I'm still amazed at that number.
I'm still amazed at that number too, because I still have not been able to hit that number. I don't know how you do it, kid.
Wow, that's amazing.
Yeah.
Yeah. So, how can people find you on social media? What avenues are you on?
So I'm very active on Facebook and Instagram. It's just my first name, last name on both. Roy Temiz, RoyTemiz. And I try to stay pretty active there. I try to do like project updates
Yeah.
and try to add some value to newer investors. You know, wherever I can, post pictures, post videos. So yeah, if you want to reach out to me, I try to answer as many direct messages on there as I can also.
Yeah.
So that's definitely a good way to reach out to me. Yeah.
That's awesome.
Okay, awesome. And just a last question
Yeah.
before I guess we conclude everything is, what piece of advice would you give people who are just getting started in real estate?
Yeah, so if you're just getting started, I would give them the same advice that I honestly gave myself. You have to find the right deal in the beginning. Like if you don't want to overanalyze, but you don't want to jump into the wrong deal either. Because if you do that first deal wrong, chances are you're never going to do another deal again. If you lose money on that first deal, you're probably going to be one and done. But if you can take from your experience and turn a profit, and my mindset was, even if I break even on this first deal, at least I've learned a new trade, and maybe I can refine it and retune it and make money on the next one. I ended up making money on that first deal, thankfully. But if I had lost money, like this whole thing would have probably gone very different. That may have been my first one in and out.
Yeah.
So that first deal, if you're a newbie, if it's your first investment, really focus on the numbers and make sure that you're going to turn a profit on that first one.
Yeah, definitely. That makes a lot of sense.
Yeah.
So,
Yeah.
all right. Joey, I don't know if you have any.
Yeah, I don't have any other questions.
So,
Cool. Thanks for having me,
No
guys.
problem.
all right. Thanks,
Thank
Roy.
you.
Thanks for being on the podcast.
All right, this is
Yeah,
awesome, guys.
thank you for
Thank
your
you.
time.
All right, good luck.
Thank you.
Take care, everyone.